Investing doesn't have to be complicated. Meet the lazy portfolio. In this video, I'll show you the lazy portfolio that actually works and the best ETFs to build it in 2025. Whether you're planning for retirement or just starting out, this strategy removes the stress, hype, and guesswork. A lazy portfolio uses a few low-cost ETFs to cover the whole market. You build it once, automate your investments, and let time do the heavy lifting. 2025 brings rising rates, AI disruption, and election year volatility. That's why simplicity wins. Lazy portfolios cut out emotion, market timing, and high fees. Here are some of the best ETFs to build your lazy portfolio. VTI covers the total U.S. stock market. SCHD focuses on dividend-paying U.S. companies. QQQM gives you tech-heavy growth exposure. VT includes both U.S. and international markets. BND adds broad bond market coverage. BOTZ is an optional satellite ETF focused on AI and robotics. Let's look at 3 example portfolios. Here's a conservative lazy portfolio. It's made up of 60% VTI, 20% SCHD, and 20% BND. This mix is ideal for retirees or investors who prefer lower risk and more income. Next, a growth-focused lazy portfolio. This one uses 80% VTI, 10% QQQM, and 10% SCHD. It's designed for long-term investors who want more exposure to growth sectors like tech. Finally, the global lazy portfolio. It includes 60% VT, 20% SCHD, and 20% BND. This option is great for investors who want simple, hands-off global diversification. To automate your lazy portfolio, use platforms like M1, Schwab, or Fidelity. Set monthly auto investments, rebalance once a year, and ignore the market noise. Wall Street loves to make investing complicated, but most wealth is built through simple, consistent action. Want more smart, low-maintenance investing tips? Subscribe here and visit smartmoneywiz.net.